Next day is the 27th. That's right in here. What happens on the 27th? Remember what I said about the doji? There's a doji bar. Let's go back to our little lesson here. Let's take a look at the pound. Now, what we're going to be looking at again is does this really mean indecision? What's going on during this day? Well, remember, when we're looking at the market, if you've got this going on and you got this going on, you're building this doji bar. So that's not indecision. That's a lot of decision. It simply means buying and selling buyers and sellers are being matched up. But more importantly, what we're looking at here, where's our prior area of high volume? Well, roughly speaking, it's right in here. Where's this doji coming down? Any coincidence? Any coincidence the doji is coming into this high volume area? No. They're simply testing to see is there any supply. Now let's look at price. Okay, obviously intraday price is moving up. Now what's going on with activity levels? Well, obviously from this point, this ultimate low, they're going up. But I would say, to be more fair, volume is really just staying pretty even. But it's staying even at a high level. Yeah, we went through it on a micro level, saw ups and downs, and we could match those up with price. But now I'm pulling back to get context. We saw volume increase into the down move. Now we're seeing the market move up, and activity just staying sustained. And we're seeing the divergence. One more session, and here we go. Now we're looking at selling or the capitulation. Now we're looking at selling or the capitulation. Okay, the test found supply, didn't it? The market brought the professionals brought the market down right back into the selling area or the supply area, and what did they find? They found some more supply. Why do they want to find more supply? Because they want to take the market up. Now, it's not to say that this is always going to work. Of course, and I probably haven't emphasized this enough throughout the whole course. Just because you see the tracks of professional money doesn't mean that they're going to be right. Okay, and I said this in the beginning. I just, as I said, have not emphasized it throughout. That just because the professional money is in there does not mean that the professional money is going to be dead on. The professional money, if they are wrong, they are out. They are gone, baby. They are not going to stick around like the retail trader and try and make their money back. The only thing that they are going to try and do is now this of course varies depending on who you're talking about, what the firm is, what their rules of engagement are, but in general, if they get into the market in this area, they're buying from weak sellers, and then the market declines down here, what they're going to try and do is force the market up so that the buyers then come in. You have all this retail money just pouring into the market, buyers, 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 and they are going to be sellers, sellers, sellers. And they're going to exit the market, and then the market can go down. So this retest is finding more selling. How do we know? Because price is going down and volume is coming up. It's not rocket science. Now, one thing we have to be aware of is overall, price has not broken this low, and volume has remained consistent. That's our context. We have to get back, ground ourselves in reality. Overall, price still has not made a new low. Volume is staying constant. So what we have found are some areas of selling. There are still some sellers down here, but